Crashing and burning are two things you happen to see almost every single day in the crypto industry. As a market that is commonly characterized as teeming with risks and fluctuations, you can be trading with assets valued at stellar amounts today, only to see them falter in the value tomorrow. Currently, the whole space of crypto is feeling the tension brought about by the economic recession that is felt globally. Inflation rates are almost at an all-time high, and as the prices of goods continue to heighten, the opposite behavior can be seen for the price of Bitcoin and other cryptocurrencies. Despite this, though, major players in the scene believe that we are only on our way to a big bounce at the end of this tunnel, and they have clear indications depicting why. Thank you for watching Diversified Streams, your go-to YouTube channel for all things crypto and finance. Be sure to check out our community post about these subjects. We are curious to know your opinions on these matters. Also, if you haven't subscribed yet, click the subscribe button so you don't miss out on the latest news and tips related to crypto. And make sure to keep your notifications on so you'll be updated with our latest videos. We frequently post so you wouldn't want to miss them. In today's video, we will be talking about the gains that are expected to arise from the crashes that we are experiencing in Bitcoin today. If you have been keeping tabs on the videos we have published so far, we made a video before this one that talks about the risk rewards in today's conditions. Today, we will be featuring the same people.
Dan, let's talk first about the macro setup that we are today and how it's affected crypto, because I think a lot of people thought that crypto and macro are different things, and they've actually merged into something similar. Talk through a bit about that.
Yeah, I think the point I would make is that, crypto is this multi-decade, very secular transformation that's happening. And then it's going to have very small cyclical correlations with risk assets, right? And it's kind of like, any disruptive thing like Apple or Amazon stock. There's short periods of time where it's correlated with the S&P 500 or whatever risk metric you want to use. But over the last 20 years, it's done its own thing. And that's what I think will happen with blockchain is, over the next, 10 years or whatever, it's going to do its own thing based on its own fundamentals. Over very short periods of time, it'll be connected to the macro situation.
Yeah, because to me, it's a network adoption model. That's what's prevalent in space, which is why it's exponential in nature. But there's periods of time when liquidity gets taken away. And a lot of people didn't realize that liquidity is going to affect all assets. So talk people through a little bit about what liquidity is and how it affects assets, because you've seen this in macro markets forever.
Yeah, and so with huge amounts of money being printed, it really gave an impetus to anything that was fixed quantity like Bitcoin or blockchain. With the Fed stopping that, it's not going to have that extra afterburner that's pushing crypto like it was the first 2 years of this pandemic. But again, the secular story's still there. And I think people are going to realize that if rates are rising, it makes investing a lot of things like bonds and equities difficult. But there are asset classes like blockchain that are not in any way directly connected to interest rates, so they can trade on their own. And that's my strong view, is that no matter what happens in the normal macro markets, blockchain can trade under its own fundamentals.
So where do you think we are in this decoupling process right now? Because this is one of the things you've written extensively about. You and I talked about it on Real Vision. You're sensing there's a decoupling. Are we there?
So historically, the decoupling happened much quicker than it's happening now. It typically happened after about 2 months. I think crypto's hit the lows. I think June is the lows. And then a really important point to stress is, although we're all used to using Bitcoin kind of as a proxy for our industry, and Bitcoin really hasn't done much since the June lows, it's important to remember that, blockchain is a lot of different things, venture, tokens, and not just, one blockchain. Oh, I would just say that, this is such a big thing. It's going to take decades to happen. And so we still really are pretty early in it. And, often people say, it took the internet 20 years to happen. No, it took 20 years just to get to the browser, right? And then it took another 30 years, to get to where we are today. So, the internet's 50 years old, blockchain's 13 years old. So we're still really early. And so, yeah, theoretically, there will come a time where, the average IRR of our industry is going to decay down. But I think we still are very early. And there's still just such a small number of people that are engaged in this, maybe 200 million, 300 million people, something like that. There's 3 billion people with a smartphone, right? And I think it's pretty inevitable. Almost everybody on Earth with a smartphone is going to use blockchain in 10 or 20 years. I'm not saying it's going to happen now. And I was just on CNBC and I followed up a U.S. congressman that had just the most reactionary negative view of Bitcoin. And the interviewer asked, had I caught, the previous comments? And, what did I think about it? I was like, it makes me wildly bullish. Like, if you still have people that have such reactionary, views, it means there's still more people to convert, right? So we're still really early in this trade.
Raoul Pal and Dan Morehead, as they have some reasons to believe that while the market is generally looking dry, Bitcoin being valued 10 times its price today is still a shoo-in. There are some interesting points we can focus on in the discussion of Raoul and Dan. First is that Bitcoin, although for the most part has been correlated with S&P 500, is an entirely different asset of its own. It works based on its own fundamentals and does not follow any other networks. And as such, the risks that are usually alluding to Bitcoin, even when it does not concern the asset at all, and only the other one which is usually related with, are not risks that it genuinely bears. S&P 500 once grew 4 times of its value at the same time Bitcoin did the same. Only this time, they grew 200 times of their value then. It is enough to distinguish the lack of correlation for the two, and certainly enough to say that Bitcoin can do well on its own. Additionally, they are also telling the people, especially those who know very little of the crypto space, to give Bitcoin some time to actually thrive. It has only been 13 years since it was established, and considering how the internet took 5 decades to be the all-encompassing network that it is now, it is actually too early to tell if it will be a failure. This is the reason why Raoul and Dan are chuckling at those who think negatively of Bitcoin at this early point in time, because it only allows for them and a few other people who have mastery of how the system works to be bullish and reap the fruits of their waiting game in the future. You may not have heard of Pal and Morehead or have little idea of who they are, but Raoul Pal is the CEO of Real Vision, whereas Dan Morehead is the founder and CEO of Pantera Capital. 2 people with great expertise in the financial and crypto industry. 2 people who think that the market is not veering away from its actual course. And in fact, it is doing a good job in laying out the premise for greater returns those with a firm trust in the market will most likely see come to fruition. Both Pal and Morehead have decades worth of experience and knowledge to say what they have said about crypto. But you only need a couple of seconds to share with us what you think about the potential of Bitcoin to bounce back from the price devaluation that it is currently experiencing. Leave a comment down below, and while you're at it, make sure that you have given this video a like and that you have subscribed to our channel. We highly appreciate it, and we'd love to have you on board as part of our community. At the end of it all, Raoul and Dan did not have to sugarcoat things and dismiss the fact that there are networks that clearly struggled as inflation rates continue to blow up. Centralized finance companies especially feel the struggle to keep up, but with stronger firms and networks such as Bitcoin, these lows are nothing they have not felt or geared up for and won over. It is something they have encountered multiple times already, and in each of those times, they still manage to prevail. Additionally, the transition of ETH from proof of work to proof of stake is something that they have high hopes in bringing together a new era of yield for DeFi. Yield is the name of the game. It is what investors want. And if it is what we can give them, then there is nothing to be of grave worry in this space. And that is it for today's video. I hope you found this video informative and helpful. As always, if you did, please show us some love and support by giving this video a big thumbs up and subscribing to our channel. And make sure to keep your notifications on so you will be updated whenever we post new videos on all things related to crypto. This has been Diversified Streams. Thank you so much for tuning in, and see you in our next video.